Hi, I'm Calvin Rose, and welcome to Market Minute. I know the markets have felt pretty rough lately. It's always hard when they're going down, but let's put things a little bit in perspective. If we take a look at the market action on Friday, you can see the equity markets were clearly down a lot. But let's take a look at the bigger picture. So let's look at the S&P 500, for example. So if we look at the S&P 500, yeah, you can see since it peaked out back in January, it's been a pretty rough road here. But to put things in more recent perspective, yeah, we had a couple of bottoms here, had a nice rally, and then have kind of seesawed back and forth. So while it didn't feel so good at the end of the week, we're still not in horrible shape here. And let me talk about how that translates to what we're seeing in the markets right now. A week ago when I published Market Minute, equity market risk was at low risk. Well, where are we today? Well, we're at moderate risk. And why do I say this? So yeah, things looked terrible on Friday, and you can see that here. The price, we had a nice rally back here, and then the price kind of backed off, tried to rally again, and went down again. So that doesn't feel very good. And what we can see from the buying and selling pressure is the buying pressure sort of has been increasing since way back here, increasing, and then started to drop off, while the selling pressure was decreasing and now has increased, and they've crossed here. Now, while this doesn't look good, I'm going to share some additional indicators that I look at that give me a sense of what's going on in the market. One indicator is never enough to tell what's going on in the market. So let's look at those other indicators. These are some special indicators that we've created, and let me explain what's going on here. The black line is the price of the Dow Jones Industrial Average, just like in the previous graph. And this orange line is what I would call sort of the slope of the risk. And when it's increasing like this, and this hasn't been moving a lot, which is actually a good thing. But when it's increasing like this, that's not good. But when it starts to decrease, like it was back here, that can be a good thing. Now you can also see it lags, right? Peaked out here, started decreasing, the price went up back here, and then started falling. So I like the fact that this is starting to fall here, but it's kind of a lagging indicator. Now, what I do see as somewhat of a leading indicator is, let's go back in time here. When this blue line starts increasing, you can see it started increasing before the price really started jumping here. This blue line is sort of what I would call an opportunity indicator. And when it's increasing, that's good. When it's increasing as the price is falling, that's even better. That's a divergent pattern. So this more recently has been increasing very nicely here and continues to increase even though the price has been faltering here. Now the purple line is the slope of the price. So obviously you want this to be above zero, and this line right here, this middle line, is zero. You can see it back here, it was above zero a little bit and then pulled back. And it's fallen below zero. But I also like the fact that this is increasing. So this is kind of a good look here. And let's look at stochastics, which I'm sure a lot of you are familiar with. Now, when I talk about stochastics, I'm not using 14 days. I'm using 250 trading days, so an entire year. And why do I do that? Well, if you use 14 days, you get a lot of noise, and you got to get a lot of whipsawing. But you can see when this blue line for the stochastics is above the orange line, things are typically pretty good. When it falls below the orange line, things are not so good. Now you can see that even though we've had some jostling here, the blue line is still well above the orange line. So this is not too bad looking here. Let's look at SPY. Same kind of a situation here. Buying pressure dropping below the selling pressure recently. But if we look at the special indicators, again, very similar look. The blue line, which is the opportunity, is increasing. The slope is increasing, the purple line, and the risk is starting to fall, which is good. And again, the stochastics, the blue line is well above the orange line. I don't like the fact that it's heading down, but it hasn't crossed. So I think this is not a bad look here, which is why I went to moderate risk instead of high risk or very high risk. Let's look at the Qs. Same thing, same selling pressure and buying pressure pattern here. Buying pressure declining, selling pressure increasing here as this fell in Friday. But if we look at the special indicators, again, the same look. Price was falling here, but the blue line was increasing actually. You got a divergent pattern here as the price was falling. So, and again, the slope is increasing. I would love the slope and this blue line to be above zero, which is this line. It's not. Whoops. But if you look at the stochastics, again, this is well above the orange line, which is a good signal here. So that's why I've indicated equity risk at moderate instead of high or very high. Where are we on interest rates? Well, a week ago, interest rate risk was low. This week, interest rate risk is moderate. And why did I say that instead of high or very high? Well, if you look at the buying and selling pressure, you'd say, oh my God, selling pressure has really popped up here very high. And that could be an indicator, but let's look at, and the buying pressure has really dropped. So the selling pressure for interest rates for TLT, 20-year duration Treasury ETF, the selling pressure has increased here, as you can see, and the buying pressure has decreased dramatically. But if you look at the special indicators, again, while the price has been dropping, in fact, since back here, the price of TLT has been dropping, the blue line has been increasing, and more recently, the slope, the purple line, has been increasing, although it's heading the other way here. On the stochastics, the blue line has been above the orange line for most of this. However, on maybe Thursday, it looks like it fell below. So we'll see where this goes going forward. Let's talk about gold risk. Gold risk a week ago was at low risk, and now it's at moderate risk. And if you look at this, the buying pressure has fallen here. The selling pressure has increased and crossed above the buying pressure. Not a good situation. But why didn't I go to high risk? Again, the blue line here is increasing. The opportunity is increasing. The slope, price slope, is sort of flattish here, maybe increasing a little bit. And the risk looks like it's falling a bit. On the stochastic side of things, the blue line crossed above the orange line and fell below. So a little rocky here, but not horrible. Where are we with cryptocurrencies? Well, a week ago, cryptocurrencies were at very high risk. And this week I'm torn. Moderate to high risk is what I would say. Let me show you why. So you can see that the selling pressure, this orange line, has been falling over time. And the price has been kind of slightly declining here. The buying pressure has been increasing over this recent period, but on Friday they diverged, and the selling pressure moved above the buying pressure. I was hoping this would keep going, the buying pressure would keep going up, but it didn't, and the prices fell here. So how does that look with special indicators? Well, again, the blue line has a slight increase to it as you move ahead, while the price has been falling. The slope has been kind of flattish here, and the risk looks like it's flattening out here and may start to fall. On the stochastic side of things, the blue line was above briefly, it's below, so not a good look. That's why I'm torn between moderate and high risk. And if you look at natural selection and how it's ranking these cryptos against cash positions with different returns, you can see that at least ADA is still ranked higher, or Cardano is ranked higher than cash. That's good. I'd like to see cash fall below some of these other ones. So we're kind of in a strange place here, kind of in a middle of the road place. So we'll have to see how this plays out over the next week. You never really know where the markets are going to go. This past week was full of some potentially bad news. Jamie Dimon said there was a big hurricane coming in the economy. Elon Musk said, he thinks the economy is faltering. Tesla's laying off 10% of its non-hourly workers, which is not 10% of its workforce. They have so much demand, they're still hiring hourly workers. So I don't view that as a negative sign for Tesla. I think people with loud voices like Jamie Dimon and Elon Musk should really be good citizens and not say very negative things, because they can spook the markets into doing things that hurt people and become self-fulfilling prophecies. I get a little irritated when people with big voices say very negative things about the economy. They really don't have a crystal ball, just like the rest of us mere mortals, and they should really be better citizens, I think, than that. I'm Calvin Rose, this is Market Minute, and thank you for watching today. If you like this video, please hit the like, subscribe, and notification icon so you won't miss an upcoming episode of Market Minute. That's all for now.